Hello, it is Friday. That means another episode of Stock Market Weekly. I am your host, Evan Medeiros. This is the show where we break down all of this week's movements across financial markets through the lens of technical analysis. We publish episodes every Friday, so make sure you are subscribed, tune back in, make sure you're up to date with the latest every single week. Now, there's lots happening this week, so let's get right into it here. We're not going to waste any time. First and foremost, equity markets pulling back here. So we had that wonderful Trump trade on that initial reaction of U.S. election results, and markets really gave a lot of that enthusiasm back this week. There's a few reasons, inflation and perhaps policies and a couple of really digesting the factors of the new appointees and the new administration, the policies that are going to be coming to us next year. We saw some decoupling here from Bitcoin, though. So Bitcoin was one of the big breakout sort of beneficiaries of election results, or one of the big enthusiastic moves to the upside. And we saw that continue this week with prices topping 90,000. Financials and energy stocks were the best spots to be, but healthcare and biotech are really getting slammed right now. So we're going to look at those charts. And we also have NVIDIA earnings on deck. So we got plenty to talk about and think about before we hit the charts. I do want to bring your attention to that time of year where Trade Risk runs its Black Friday sale. We just kicked it off and just launched it moments ago. So you can, we'll put the links in the description of this episode, but we are basically taking discounts across all of our trading memberships, all of our TC2000 downloads, and our TR150 watch list. So our trading systems have been kicking butt this year, and we've got 3 of them now, and we have a roundtable portfolio, which also gets you access to all 3 of them at a discounted price. They're all very different from one another. So if you are a discretionary trader that likes particular trade setups, then you could leverage the one that makes the sense to you. If you're someone that's more hands-off, looking for just kind of max, diversification across all these different systems, different time frames, different trading strategies, then something like the roundtable is probably for you. And as we see in these videos all the time, our Warden TC2000 store, lots of the layouts, indicators, stock scans. We did plenty of new products this year, so everything is on sale. Go and get it. Happy holidays. We'll put those links. Oh yes, and we are doing a special offer this year. So for anyone who spends $500 or more, 30-minute session with me. Let's talk about whatever it is that you want to talk about. So if it is TC2000 related, I can walk you through the scans, the downloads, your platform. If it's something on the trading strategy, some trades that you made, and you want my advice, I'm not a advisor. I'm not going to tell you what to buy, so don't think of anything like that, but I can certainly help you with mindset, strategy, some of the things that are working for us this year, and anything that you'd want to talk about. So enjoy the sale, thetraderist.com/sale. That should get you there, or we have links in the description of this video. Now let's move on because we've got lots here. So red across the board, 1 week return. Take a look at this. Russell 2000, that was hit the hardest this week, down 4%. Take a look at volatility. It really wasn't up that much, right? This was a pretty tough week, and this is notable here that we saw the S&P 500 down over 2%, and we saw a 1-point rise here in the VIX. So there is some interesting dynamics going on here, I would say, with just volatility and dispersion, but it is notable here that we did not get such a freak out here by volatility indices. If we take a look at our sectors here, you can see that on the week it was mostly red. We had financials and energy, utilities just eking out those positive gains. Everything else was in the red here. Healthcare hit the hardest. Now, if we take a look at our sector trends, notice last week we talked about a lot of kind of the swings up, the transitions up from neutral to bullish, or from bearish to neutral and potentially bullish. And some of that is starting to give way a little bit. Real estate had been tough. It's still in a tough spot. Materials rolling over this week. It never turned up post-election. This was one of the laggards. Staples continue in this downtrend, which has been in place here. That didn't turn up. Utilities, even though they were green this week, basically flat. They are still in pretty much a downtrend, but it's healthcare. Look at these bottom two here. Biotech and healthcare really getting slammed. Perhaps markets are spooked with RFK Jr. getting appointed to be in a decision making position here that could certainly impact the policies that are going to be coming down on some of these drug companies. So that's certainly seemingly one of the big catalysts here of just that general uncertainty. If we take a look here at market breadth and we look at 52-week highs and 52-week lows, you can certainly see that there was an uptick here in 52-week lows, and we did start to see some highs dry up. So this is something to monitor here. It is not basically a market that is getting that strong follow through from the post-election excitement. It is now kind of resetting itself here, and I think the market is again just chewing on this Trump presidency, what a Republican sweep looks like, and the new policies and the new appointees that are going to potentially be in power here. And I think the market is chewing on that. And inflation, right? Inflation, as we're about to get to here, if we look at our macro slide, you can see that the dollar continues to rip here. Yields are just staying very sticky, and the market priced in just less or more hawkish, I guess, outlook here for the Fed as we look out the next 6 months. It's perhaps in Federal Jerome Powell had a press conference this week and basically saying like, look, we might not be just on an automatic, 25 basis point cut every single time we meet. We might have to skip some cycles. We might have to kind of stretch this out if inflation is here to stay sticky. So this is something now that the market is chewing on. So you can see dollar continued up. Rates, again, were mostly flat, but still pretty staying elevated from, considering where they've come from over the past month or so. If we take a look at commodities here, again, take a look at Bitcoin. It is just continuing to see a super strong momentum and acceleration here, up 19% this week. Silver, gold, oil, copper, all down and down firmly here, 3 to 4% to 5% for copper. So some big moves there. Now, I do want to take one quick pit stop here and thank our sponsor, Investors Business Daily. They do help make the show possible. You can support the show, support us with a link in the description of this video. For the new year, consider getting that IBD digital subscription. Really keeps you up to date with the top 50 stocks, some editorial content, and some different tools that they have on their website. So check out that link in the description of the show. Thank you, IBD, for sponsoring this show. Now, let's get into some price action here, okay? So let's kick it off here with the S&P 500 first. And there's a couple of things happening. So on a weekly chart now, we can look at this weekly bar, and basically, it's not quite an inside week because I think we marginally made a new high, but it was certainly a pullback digestion week. Last week was the big, kind of record year plus best week returns for stock markets, and we're giving some of that enthusiasm back right now. Now, I would say that, generally speaking here, it's not super concerning as of right now. If we can, kind of hold above the October high here, if we give, 50% of last week's range back, all in all, that's not a terrible look. The daily chart, though, does just give me a little bit more pause. So when I see this big urgent kind of gap down on Friday that had no attempt to fill, in other words, we opened the session at the highs basically and then proceeded to sell off throughout the session and stayed weak. That is concerning, and notice we did do it on some heavier volume. So I don't like the rush to the exit door action that we saw on Friday. And so that gives it some negative points, puts it in the penalty box a little bit. But generally speaking, we were up 5.6% in 6 trading sessions. If we gave 2.7% back like we just did, and the lows can hold here, if we, can stay firm on Monday and we don't just continue to roll over into this big gap, then that's not a terrible look. It would, end up presenting itself as a bit of a retest of these old highs. But that's to be determined, right? We can't make any of those claims yet. The one thing we do know is that now Friday's session is kind of a lone lone candle here. You've got a gap above us and you've got a big old gap below us. So no matter how you cut this, Monday, we're sort of disappointing or leaving, one of these gaps kind of in the dust. And so it's going to set the tone a little bit, I think, on future Sunday night, Monday, and how we open up and trade. I don't ever want to, emphasize or be too dramatic on a single session, but I do think Monday is an important day on the short-term direction of this market, just to see, how much pent-up selling there really is in this market right now. So I think we're at an interesting spot. The trend is up. Breadth is still hanging in there. Sectors are hanging in there. We have, again, an accommodative sort of, growth landscape, a favorable administration coming in. So I still think that dips, generally speaking, are going to get bought up here, but we'll have to see. The S&P could easily come and close this gap and kind of reset itself in this, 5650 range to 5,900 into the end of the year, right? So certainly plausible. If we take a look at the Nasdaq 100, once again, the action on Friday gives me a little bit of hesitation, right? More hesitation, I should say. More hesitation than the S&P 500. I never like to see old highs like this, old significant highs. So in this case, from July in the Qs, I never like to see those abruptly lost like we did on Friday. So if we take a look here, we definitively, why is this not lining up? Right in here. So the highs in July were 503. And you can see we gapped right below it. And again, we put in some heavy volume. The high of the session was the open, and then we just sank lower. And we are in this gap here post-election right now. So the Qs are back to being a relative underperformer here, and they just lost the July highs. So the Qs here definitely have a more pessimistic look. This is a theme that we've been talking about now for multiple weeks, if not multiple months, that the Qs have been diverging or underperforming on a relative basis, and they're certainly back to doing that right now. So Qs, penalty box, most of the comments I just mentioned about the SPY pretty much apply here. To get this looking good again, we got to get back into this gap. We got to get back over 504, 505 and start, moving, inching towards those highs. We have NVIDIA next week. We'll look at those charts in just a moment, but that's going to be a big one for the QQQ. Last but not least, we have IWM. So again, this has been kind of my go-to spot here for the market, and this was not immune to the weakness this week. In fact, it was one of the hardest hit. It was down 4%. Notice things look a little different here though, right? So we're definitely into the gap from post-election. So there was no breakaway, runaway gap that just melted up into the end of the year. We're checking right back here, and we're in the midst of it. Now, I will say 225 or so, the structure is set up just a little bit better here. I still, despite the down week that was big, I still actually like Russell 2000 the best still. 225 is a good line in the sand. It's a big line in the sand. And if we can stay above it, if we do come in here and fill the gap, it's definitely not the optimistic super bull case to finish out the year. Ideally, we would have held the gap or held the bulk of the gap and then, continued to trend into the end of the year, but we're not getting that. So IWM, we're filling right now. 225 is a big spot. Again, if it pierces below it briefly, I'm not going to be overly concerned, but generally speaking, 225. Keep in mind, we're down 4 days in a row here for the Russell 2000. Same thing for the Qs. So in the short term, the market has pretty much spent this whole week digesting and pulling back. Friday was the rough session. So, we're short term kind of oversold, if I want to use, I don't love that word, but seems to be the way things are shaking out. So let's keep an open mind here. Lots of cross currents. It still feels broader that dips will look to be opportunities, but that could change if we get another week like we just got. So Qs sinking below those July highs. We talked about that. Where are we going next? Let's go to Bitcoin next, because I think it's a pretty big story here. So the reason it's a big story is because it diverged. It successfully sort of decoupled itself. And I know this is just 1 week, but it's an important week in the sense of risk assets here were pretty much selling off unanimously across the board. But here you go with Bitcoin, which the correlations are always rolling, right? Sometimes it's correlated to gold, sometimes it's correlated to Nasdaq. And now you can see that it's definitely in a little bit of a mind of its own here. It started the week strong. We pushed up to 90K, and we spent this week just wrestling sideways. And then we finished the week strong, pretty much closing towards the highs. Same thing for IBIT here. I don't have volume on these charts, but the volume was pretty tremendous this week. So if I look at IBIT on a weekly chart, I mean, take a look at this, right? This is dollar volume. So this is $19 billion traded in IBIT. This is, 50% more than the highest week back here in March. So there's definitely, momentum, a frenzy, a chase, however you want to think about it, a squeeze, and that continues to occur. We are long this. So speaking of our trading systems, Galahad, as I mentioned, is our trend following system that trades Bitcoin. It is long IBIT. It did, I guess, think of it as scaling profits. It rebalanced this week and took some off the table. So it is, but it's still very much long and engaged in a long Bitcoin position. So we're going to continue to enjoy the trend here, and hopefully it can continue into year end. I tweeted or posted on X that 100K is pretty much a magnet at this point. It's a big, round, shiny number, right? We know markets love to go test those areas. It's rooted in the psychology of markets. When you get next to one of these big magnets, $10,000 used to be a lot in a Bitcoin change of price. 90K to 100K now, you're talking, 10.8%, 10.5%. It's not that far. It feels like the market wants to go test and probe a big number like that. So that seemingly is on deck in the near term. I will say one other stock I think is increasingly interesting here is MicroStrategy. Now, full disclosure, I do have a position here as well. MicroStrategy is really accelerating here in volume. I think that it is certainly worth paying attention to the financial engineering that is happening underneath the hood here in MicroStrategy, and the way they are acquiring Bitcoin and doing convertible notes and doing at-the-money offerings is certainly paying spades. The market is giving MicroStrategy some pretty good value for its actions right now. So I would say continue to pay attention to it. It's a chase, right? This is just like Bitcoin. It's extended. It is not a new move here. So buyer beware, and it's extremely volatile, but it is certainly something that is, becoming more mainstream as to what's going on here. And its market cap now is 55, 60 billion. So it's a big company. Do have a position here. MicroStrategy, though, big volume, big gains this week as well. So that's Bitcoin. Let's talk about what's not working this week. It's back to semiconductors. So we were pretty early on the semiconductors weakness. We started talking about the semiconductor weakness right back in here in middle October. We talked about the fact that even still to this day, it never got back in here and filled this gap, right? So think of the Qs as being the underperformer. Well, the semiconductors, which is a big part of technology, is even underperforming that, right? So this is very much a tough spot here for the market. And this is really kind of, in my opinion, the hallmark reason why you get technology lagging. When you have such a big sector like semis not performing, then that's going to drag down kind of everything else. This is back below my, I was using 245 line in the sand here, right? We talked about this breakdown, then it got bid, right? We didn't find any follow through. So if, thinking about shorting semis, you gotta forget about that idea. If it's back over 245, we had a little bit of a squeeze, and now here's the rollover again. It's back below 245. It's just looks weak. It looks tough and sluggish. We've got NVIDIA next week. It's going to move this market, so let's pay attention. Maybe that magical bid appears again, and it pushes us back up. For me, I don't really have... I think our trading systems are trading some individual stocks within this sector right now, but don't have any other big, bold calls here. It looks weak. I wouldn't really want to own this until and if we start breaking back out or holding up a little bit better. More weakness in the market is healthcare. XLV, this is getting, I'll use the word extreme, or it's for healthcare, this is a pretty, significant move. It's down 11% in 2 months. This is not a sector that typically moves that fast, pays dividends, right? A little more defensive, and continues to just pretty much grind here. So this is clearly had one of its big weeks down. Let's throw in Bollinger Bands here. You can see that XLV is entirely underneath the daily Bollinger Band. Weekly Bollinger Band is starting to pierce below. It's pretty oversold, right? Sentiment's getting very sour on this. Again, could be, largely with the just policy uncertainty with RFK Jr., but there's definitely something here that the market is getting out of the way for. And technically, again, oversold. You can do with that as you wish. I have been seeing some buying signals come in here on some of our individual trading systems recently, but individual companies, you just want to pay attention to what they're doing. Biotech, if you're looking at XBI, I mean, take a look at this. Look at this weekly chart. This looks terrible here for a weekly bar. Big volume traded, heaviest volume that we've seen in almost a year, and bearish engulfing week that just engulfed. It basically engulfed, what is this, 2 months, 4 months. So one weekly bar just engulfed four months of trading. That's pretty extreme. And this daily bar on Friday, look at the volume here. I mean, this looks like some capitulation, but you do have to be extremely brave to want to step in right here. So there's opportunity clearly as the volatility is elevated, but you just got to be a little bit careful there. Last but not least, let's talk about NVIDIA. So NVIDIA here, look, this looks a heck of a lot better than any other semiconductor, right? So this is still above the June highs. This is, pulling back here this week on the, let's see, sorry. Weekly chart, it was down 4%, so it certainly wasn't immune this week, but it is still holding above its July highs. The structure here doesn't look terrible. It does look a little bit tired. I don't know if it's wedging here and it's ready to, kind of squeeze or expand based on its earnings. But for me, I don't have a position in here directly, but it's going to move semis. And, the question is, can it just drag up every other semiconductor in the SMH? If its earnings, continue to blow out of the water? I mean, I guess it could. I just don't know how healthy that is for the market. Generally speaking, I'd love to see some other semis participate. There's a couple, but NVIDIA is really top dog here. One of the biggest, it might be the biggest right now company in the market, and its earnings are next week. So should be lots of fun as the market starts to get into its holiday season. Don't forget about that Black Friday sale. It's running. I don't have a tab open. There it is. Check it out, thetraderist.com/sale. I'll put a link in the description of this video as well. It's going to be running for at least the next week or two towards into the end of the month. So check it out. If you have any questions, reach out to us on the website and we're happy to answer. And hopefully you had a good week trading out there and managed to sidestep a little bit of that carnage. I think this week was more of a week to preserve capital rather than make a lot of money, unless you were focused really on the crypto kind of Bitcoin space. But yeah, I think that's it for this week. So as always, thank you so much for tuning in. We'll be back next Friday. Take care. Have a good weekend. We'll see you next time.